will start with consignment accounts today. First of all, we will understand what is the meaning of consignment, and thereafter we will find out the characteristics of consignment, and finally how to account for consignment transactions in the books. Let us understand the meaning of consignment. To send goods on consignment means sending goods to another person or firm on the basis that the goods will be sold on behalf of and at the risk of the person sending the goods. That means goods are not actually sold when they are transferred to another person. That another person or firm will be selling goods on behalf of the person who has sent the goods, and the entire risk will be borne by the person who is sending the goods. And the person who has sent the goods or is sending the goods is called the consignor. He is the principal. That means he is the person who is taking all the risk involved in the sale of goods, and the person to whom the goods are sent is called the consignee. So there is a consignor-consignee relationship in a consignment. So a consignee is the agent of the consignor, and therefore the consignor is the principal and the consignee is the agent. So the ownership of the goods, that is what we call the property of the goods, remains with the consignor. That means even if the goods are sent to consignee, the ownership always remains with the consignor, and whereas the possession only is transferred to the consignor. That means actually the goods get transferred physically to the consignee. So the consignee will not become the owner of the goods merely because they are in his possession. Even though the consignee gets possession of the goods, he will not be treated as the owner of the goods, because the ownership always remains with the consignor. On sale, that means when the consignee sells the goods finally to the ultimate consumer, the buyer of those goods, that is the ultimate consumer, will become the owner of the goods. That means ownership directly passes from the consignor to the buyer. The consignee is only an agent who is acting on behalf of the consignor, who is called the principal. So the principal does not send an invoice to consignee as there is no sale, because he is sending the goods to consignee, but since it is not considered a sale, there is no question of sending any invoice, but he only sends what is known as a pro forma invoice. That means indicating the price at which the goods have to be sold and or the details of the goods which are being sent. That means the description of the goods sent, like quantity, etc., is detailed in the pro forma invoice. Normally what happens is, in the case of a consignment, consignee recovers all the expenses incurred by him on the consignment from the consignee, from the consignor. Therefore, so the consignee sells only on behalf of the consignor. Therefore, whatever expenses he is incurring is required to be reimbursed to him by the consignor. In addition to that, he has to get certain amount as his remuneration for undertaking this work. It is called the commission. So the consignor has to pay all the expenses on account of sale of goods by the consignee, and also commission to be paid to him. This, however, can be agreed to between the parties concerned. How much has to be paid, what would be the commission, that is all a matter of agreement between the consignor and the consignee. And it is possible that the consignee also may get advance from the consignor. That means in some cases, since he has to spend the money in advance, he may try to get an advance from the consignor, and this can be done either in the form of cash. That means the consignor will pay cash to the consignee, or he may issue a bill of exchange, and ultimately the amount of advance which has been given by the consignor to the consignee will be adjusted against the sale proceeds of the goods. And for the sales undertaken, as I have said, the consignee receives commission, that is his remuneration. It is calculated normally on the basis of gross sale. That means it will be normally a percentage of the gross sales made by the consignee to the ultimate buyers of the goods. And if there are any bad debts on account of credit sales made by the consignee to the ultimate consumers, such bad debts will not be the responsibility of the consignee. It will be at the total risk of the consignor. So in case the consignor wants to pass on this risk of credit sales to the consignee, then he has to pay an extra amount which is known as del credere commission, and in the absence of such an arrangement between the consignor and the consignee, the normal commission which is called the ordinary commission. So, consignee is normally an ordinary commission agent, and if he is made responsible for the risk involved in the sale of goods on credit, then he has to get an additional commission which is known as del creditor commission, which is calculated on the total sales made by him at some agreed rate. That agreed rate is a matter of agreement between the consignor and the consignee, and in respect of all the sales made by the consignee, he is required to send at periodic intervals a statement. Normally it is done at monthly intervals. Such a statement is called account sales. So, account sales is nothing but a statement sent by the consignee to the consignor, detailing therein the sales made during a particular period, normally on a monthly basis. So, it also, the account sales also details, in addition to the sales made, it also has to indicate the expenses incurred by the consignee on behalf of the consignor, that is on behalf of the principal, the commission earned by him, and the balance due to the principal. That means how much money he has collected from the sales, and after deducting the commission, how much money is required to pay to the consignor. And consignor usually wants to ascertain the profit or loss of each consignment to each agent. So, in order to ensure that whatever consignments have been sent to the agents, consignor would like to know what is going to happen to his business. That means he is interested in knowing the profit or loss incurred in respect of each consignment. For that purpose, he is required to maintain books of accounts, and he is required to pass certain entries, so that he is able to ascertain separately profit or loss made on account of each consignment. So, each consignment could be in respect of one agent, or it could be a consignment account in respect of each of the agents. He may have more than one agent, in which case he may have to find out the profit or loss earned by him in respect of several consignees, or even in respect of one consignee, he may be sending goods on different dates. That means each consignment he would like to know what is the profit or loss. So, depending on the requirement of the consignor, the books of accounts need to be maintained, so that it is possible for him to easily ascertain the profit or loss made on each consignment, or made for all consignments to a particular agent or not. And before we go further into the accounting part, we have to find out what is the distinction between consignment and sale, how consignment differs from sale. So, this is on account of the following factors. The first one is, in the case of consignment, ownership of the goods rests with the consignor till the goods are sold by the consignee. That means merely sending the goods by the consignor to the consignee does not result in transfer of ownership of the goods to the consignee. The ownership continues with the consignor. Whereas in case of sales, the moment goods are transferred to the buyer, the ownership also gets transferred to the buyer. That means there is a direct change in ownership on account of sale, whereas in case of consignment, there is no change of ownership, there is only change of possession. And the second important difference is, in case of consignment, the consignee can return the unsold goods. If the consignee is not able to sell some of the goods, he is free to return those goods to the consignor. That means he is not duty bound to sell everything or to accept everything sent by the consignor. Whereas in the case of buyer, once he has bought the goods, then he cannot return the goods until the seller agrees. Unless there is an agreement for return of goods, the buyers are not duty bound or are not required to return the goods, or the seller is not required to accept the goods back. In the case of consignment, the consignor bears the risk of loss of goods held by the consignee. That means if there is any loss occurring to the goods when they are with the consignee, the risk is entirely borne by the consignor. The consignee does not bear any risk. Whereas if anything happens to the goods in the hands of the buyer alone is responsible for the risk of loss. Once delivery of goods is made by the seller to the buyer, it is the responsibility of the buyer to take care of the goods. Seller's duty ends as soon as the sale takes place, as soon as the sale is effected. And in the case of a consignment, the relationship between the consignor and the consignee is that of a principal and an agent. So, the consignor is the principal and the consignee the agent. So, whatever actions a consignee undertakes is on account of the principal. That means, all the risks of the actions of the consignee will devolve on the consignor, that is the principal. Whereas, in the case of a buy and sell arrangement, it is the relationship is that of a debtor and a creditor. One is the debtor and the other is the creditor. So, risks will get transferred immediately on a sale being effected. In the case of consignment, whatever expenses are incurred by the consignee to receive the goods and to keep them safe until sale will be borne by the consignor. That means, all the expenses which are required to be borne by the consignee for sale of the goods, for storage of the goods until sale, all these will be borne by the consignor only. And in the case of a buyer, once he has bought the goods, all the expenses after delivery of the goods to the buyer will have to be borne by the buyer only. So, this is the essential difference between consignment and sale. Now, we have to consider how the accounting is done in the books of the consignor as well as in the books of the consignee. That means, both of them are required to maintain books of accounts, and both of them are required to put through the transactions in respect of the consignment sent and received. Let us now try to understand how accounting entries are passed in the books of the consignor first, and then we will go on to the books of the consignee. In the case of a consignor, for ascertaining profit or loss on any transaction or series of transactions, open an account called consignment account for the transaction or series of transactions. That means, he can have a separate consignment account for each of the transaction, that means the set of goods sent, or he can have one consignment account for a series of transactions, that means for a series of goods sent during a particular period, depending on what he wants to do. If he is interested in trying to ascertain the profit and loss position for each consignment sent, then he can open one consignment account for each consignment sent, in which case it will be possible for him to track what is happening in respect of each of the consignments. And there what he does is, whatever goods are sent and whatever expenses are incurred are debited to this account. That means, all the cost, including the cost of goods and expenses, will be on the debit side of the consignment account, whereas all the proceeds received from the consignee on account of sale of the goods, including the cost of unsold goods, is put on the credit side. It is exactly like the profit and loss account. So, in the case of a profit and loss account, normally what we do, we put all the sales on the credit side, we also put the closing stock on the credit side. Here, instead of the closing stock, we call it the unsold goods stock, because it has not been sold by the consignee. So, that is also put on the credit side, and on the debit side we put all the cost of goods and all the expenses incurred for sale of these goods. The difference between the two sides will give the result. It could be either profit or loss. If it is profit, it means that the credit side is in excess and the debit side is in short. The difference is always profit. But if the debit side is more than the credit side, then it will result in a loss. So, this is how consignment account is maintained in the books of the consignor. So, the entries which are required to be passed for this purpose are as under. So, first of all, the step starts with the goods being sent on consignment to the consignee. Let us call the consignee as X. So, here goods are sent on consignment to X, in which case consignment to X account is debited and goods sent on consignment account is credited. That is the first entry to be passed. That means, consignment to X account, that means this shows the amount of goods sent to X, that account is debited. When the expenses are incurred by the consignor, so even for sending the goods also, consignor also has to incur certain expenses. These are also debited to the same account. So, you debit consignment to X account with the amount of expenses incurred by the consignor, and respectively you credit the bank account or the cash account, depending on whether the expenses are incurred through a bank account or by cash. And similarly, advance sent by the consignee, that means if the consignor has got any advance from the consignee, such account is obviously debited to the cash account or bank account. If he has sent cash, it will be debited to cash account. If he has sent a check, it will be debited to bank account, and excess account is credited, showing that there is a credit balance in the account of X. That means it indicates the advance received by the consignor from the consignee. So, in the case of bill of exchange, instead of sending an advance, the consignee also can send the bill of exchange. Which bill of exchange the consignor can encash with the bank. That means he can get it discounted. In that case, what is to be done is bills receivable account is debited instead of debiting the cash account. In the case of an advance received, cash account or bank account is debited. In the case of a bill of exchange, bills receivable account is debited and excess account is credited. Excess account credit indicates that the advance has been received by the consignor from X, that is the consignee, in the form of a bill of exchange. And the bill also can mature after some time when it has to be paid by X, because X has drawn the bill of exchange, it has to be paid by X. So, on that date bank account is debited, and whatever you have debited to bills receivable account is credited. That means bank's receivable account is closed, that entry is reversed by putting the money in the bank account. So, bank account is debited and bank receivable account is credited. On receipt of account sales for sales made by the consignee, that means once the sales are made, periodically he has to send a statement known as the account sales, indicating the total sales made by him during that particular period. So, once that amount is received from the consignee, what you have to do is excess account has to be debited and consignment account has to be credited. That is the amount of sales received from consignment. And in respect of expenses incurred by X, that means even the consignee is also incurring certain expenses, these are also have to be accounted for. So, that is also debited to consignment to excess account and credited to X account. That is, the excess account is credited because this money has to be given back to X, and for the commission due to X, again you have to credit excess account because this is the money to be paid to X, and consignment to X account is debited. For the remittance that may accompany the account sales. So, first of all you received the statement of accounts, that is called the account sales, in which case you had debited the excess account, and now you have to reverse that account by debiting the bank account. So, you debit bank account for the money already received and credit excess account. So, earlier transaction which you have debited excess account gets reversed when the actual remittance comes to the account of the consignor. For the goods that remain unsold, so even after the end of the period, certain goods are unsold and are lying still with the consignee. So, for such cases, you have to create a separate account known as stock on consignment account, that is debited, and to consignment to X account is credited. That means it has to be taken to the consignment to X account. And at this stage, the consignment to X account will reveal either a profit or loss depending on whether the credit side is in excess or the debit side is in excess. The profit or loss then will be transferred to profit and loss account by debiting the consignment to X account. So, consignment to X account gets closed once the profit is transferred to P&L account. So, if it is a loss, of course, the entry will be reversed. Instead of crediting P&L account, if it is a loss, you have to debit the P&L account and credit to consignment to X account. With that, the consignment to X account will get closed. Then the goods sent on consignment account shall be closed by transfer to the trading account. So, there you have to transfer the entire amount which has been received to the trading account, because trading account is the total profit and loss account of the entity. So, consignment is only one part of the transactions. The consignor may be selling goods separately also directly. So, in order to ensure that the total trading profit and loss account of the entire entity is reflecting this consignment sales also, this entire thing is transferred to trading account. So, we have to debit goods sent on consignment account and credit trading account. So, ultimately this entire thing goes to the trading account. So, it will become part of the total profit and loss account of the consignor. So, now a problem may arise in the treatment of accounting. because of valuation of stocks. Normally what happens, yesterday like we have seen in the earlier chapter, valuation of inventories, that the inventories need to be valued either at cost or net realizable value, whichever is lower. That means if the realizable value has gone down, you have to bring down the value of the inventory to that level, otherwise they have to be treated as at cost only. So what happens in the case of consignment, cost of goods means cost of goods for the consignor plus all the expenses incurred till the goods reach the premises of the consignee. So here, if you go by the definition of the inventory, inventory is defined, the cost of inventory or value of inventory is defined as the cost to bring the goods to the present location and condition. In this case, the goods are lying with the consignee. So whatever expenses are incurred in sending the goods from the consignor to the consignee need to be included in the cost of goods which are lying with the consignee. But once the goods reach the consignee, then whatever expenses the consignee incurs on the stocks cannot be included in the cost of goods, because they will not be changing the location and condition of the goods. Therefore, all expenses incurred after the goods reach the consignee will not be part of the cost of goods. So this is very important. For example, the consignee has to store the goods in a warehouse. Whatever expenses he incurs in storing the goods in the warehouse will not be part of the cost of goods. So only expenses which are incurred by the consignor until the goods reach the place of the consignee will be included in the value of the goods. And another problem which may come up is the consignor may also invoice the goods at cost or at any price above cost. Normally what happens is, consignor may not want to reveal at what cost he is taking the goods. He does not want to give that information to the consignee. So in order to avoid this, he may deliberately invoice the goods, that is pro forma invoice will be at cost plus a certain percentage, in order to ensure that this confidential information is not divulged to the consignee. So in that case, whatever he has added needs to be taken out when the goods are valued in the books of the consignor. That means whatever addition he has made in invoicing the goods at a higher price need to be removed. So this is absolutely necessary, as otherwise it will not reflect the correct position in the books of the consignor. So this can be done by passing certain adjusting entries in the books of the consignor. So what is done is, goods sent on consignment account is debited and consignment to X account is credited. This is to remove the effect of loading on the stocks consigned to consignee. That means whatever extra he has added to the cost in the pro forma invoice, that is removed by passing this entry. That means suppose he has raised the price by 10%, he has added 10% on the cost of goods. This additional 10% is removed by passing this entry, and that consignment to X account is again debited and it is held in the form of a stock to reserve account. That means whatever stock to reserve account shows as a credit balance is the excess of the cost transferred to the consignee in the books. That means actually the cost is not higher, but it is shown to be higher in the pro forma invoice in order to deliberately avoid revealing the information to the consignee. So the stock reserve account created will remove the effect of loading which has been done in the closing stock on account of increased invoicing of the goods by the consignor. So the net effect will be, we will have a stock on consignment and stock reserve account will be that the figure would match with the closing stock had they been valued at cost. So once these are taken into account, it will exactly match as if the closing stock has been valued only at cost. That means whatever effect has been there of the loading has been removed by passing these two entries. In addition to that, we have to think of the treatment of different kinds of losses known as abnormal loss and normal loss, and also how to account for the commission. So in the case of abnormal loss, we have to define what is the meaning of abnormal loss, and we have to find out how this is accounted for. So abnormal loss is not obviously a normal loss, it is on account of certain accidental or unnecessary loss either due to fire or theft. These also have to be accounted for. This amount is separately ascertained and is credited to the consignment account by debit to P&L account. If any amount is received from the insurer, then the net amount of loss only should be debited to P&L account. That means, if the goods have been insured, then whatever money is being received from the insurer will have to be debited to the P&L account. The normal loss is something which cannot be avoided, which is inherent in the nature of the goods. Such loss has to be spread over the entire consignment while valuing stock. For example, let us say cement bags are being sent from one place to another. Normally, when cement bags move, there is no normal loss of seepage of cement through the bags. Normally, let us say it is 1%. So, when 100 tons of cement is sent to the consignee, 1% is lost. That is only 99 tons reach. So, 99 tons only can be accounted for by the consignee because 1 ton is lost during transit. So, while taking the cost of the 99 tons, whatever cost was there for 100 tons is spread over 99 tons only. That is how the normal loss is accounted for in the entire consignments. That is how valuation has to be done. So, the actual cost per ton will not be the total cost divided by 100 tons, it will be actually total cost divided by 99 tons. That will give you the value of 1 ton. And similarly, we have to think of the treatment of commission given to him. So, the consignee, as you know, pays commission to the consignee based on the sales made by the latter. That means, whatever sales consignee is making, the consignee is entitled to receive commission from the consignor. The consignor may agree to pay either ordinary commission or, as we said, del credere commission. So, and what is the amount of commission, what is the percentage is a question to be decided between the consignor and the consignee depending on the agreement they have with each other. But there is a difference between ordinary commission and del credere commission that we have seen, that in the case of ordinary commission, it is the commission for undertaking the sale of goods, and in the case of del credere commission, it is a commission paid on total sales at a higher rate to encourage the consignee to make credit sales and also to take the risk of making those credit sales. That is, risk on account of loss due to bad debts is on the consignee. In addition to that, some overriding commission also can be paid to the consignee to promote sales at a higher price. For example, let us say he wants the sale price to be a certain minimum, and he can tell the consignee that if he sells it them at a higher price than the normal price indicated, then he will get a higher commission. That is called a overriding commission, in order to ensure that the consignee is able to push the sales at a higher price than what is normally agreed to. So, all the three different types of commission, that is the ordinary commission, the del credere commission and the overriding commission, have to be accounted for, and they have to be paid by the consignor to the consignee.